The SEC and FINRA are investigating over 200 firms for suspicious trading linked to Bitcoin Treasury announcements. This is the first coordinated probe into Wall Street's rush to adopt crypto, and it could change everything. Welcome to Plugged In Crypto, where we break down the biggest shifts in crypto without the noise. Here's what's happening. Regulators noticed unusual price activity in stocks before big Bitcoin purchases were announced. Shares spiked hours or days before these announcements went public, raising eyebrows. Now, more than 200 firms are under scrutiny for potential insider trading and market violations. The implications are serious. Corporate Bitcoin treasuries have become a bullish signal for the market. If these announcements are being leaked, it undermines confidence in this adoption wave. Companies might slow down or rethink their Bitcoin strategies until the rules are clearer. Historically, insider trading investigations aren't new. But this time, it's about Bitcoin. Bitcoin is seen as digital gold, a hedge against inflation and currency risk. Public firms buying Bitcoin have driven adoption since 2020, with MicroStrategy leading the charge. Each announcement added legitimacy, but now regulators worry insiders might have an unfair edge. If that narrative sticks, it could slow down Treasury adoption just as pensions and 401k allocations are being debated. Trillions in U.S. retirement accounts are at stake as ETFs and other products expand. Policymakers want that capital to enter cleanly, under strict rules. If Wall Street looks compromised, it could delay inflows from retirement accounts and endowments. There's a geopolitical angle too. European regulators have strong disclosure requirements in place. If the US stumbles, it risks looking unprepared to regulate corporate finance and digital assets. What are the possible outcomes? One path is stricter disclosure requirements for Bitcoin purchases. Companies might have to announce Bitcoin buys through regulated channels, reducing leaks and restoring confidence. Another scenario is delayed adoption, as firms might wait for investigations to conclude before acting. This pause could flatten the corporate adoption curve, a key driver of the bull market. A third possibility is deeper integration. Clearer rules could make companies feel safer adopting Bitcoin. But there's risk. Investigations can drag on, and negative headlines could sour the narrative. If insider trading becomes a talking point, it could set back Bitcoin's legitimacy in treasuries. Caution is key. Bitcoin's long-term thesis doesn't hinge solely on corporate treasuries, but they do provide momentum. If confidence weakens, the hype cycle could lose fuel. However, don't overstate the danger. Wall Street has weathered insider probes before. Markets adapt, new compliance frameworks emerge, and stronger rails often follow. If this pattern plays out, today's probe could lay the groundwork for cleaner, larger adoption. So what does this mean for the market right now? Expect volatility. News about investigations will spark headlines and price swings. Expect caution from corporates. Announcements may slow as boards rethink disclosure. And keep an eye on political angles. Lawmakers will likely push for stricter oversight if insider trading is involved. The bottom line is clear. Corporate Bitcoin adoption has been a strong bullish narrative. But if that adoption is tainted by insider trading, regulators will act. This could slow inflows from major capital pools like pensions and retirement accounts. The long-term future still points toward integration, but the path may be slower and more heavily policed than expected. Please subscribe to Plugged In Crypto and stay plugged in.